What's up everyone, welcome back to Wool of the Market, where we break down money, markets, and the madness in between. Today, we're talking about a legend. A myth. A story whispered by traders every December like it's folklore from Game of Thrones. That's right, the Santa Rally. You've probably heard the phrase, Santa Claus is coming to town, but according to Wall Street, Santa apparently brings stock gains along with presents. But is the Santa Rally real? Or is it just another market fairy tale like, stonks only go up? Let's break it down. What is the Santa Rally? So first, what is it? A Santa Rally refers to a pattern where the stock market tends to rise during the last 5 trading days of December and the first 2 trading days of January. This idea has been around for decades, and traders treat it almost like a holiday tradition. Some years, the rally shows up. Other years, it ghosts us harder than a main character in Stranger Things. So where did this myth even come from? Origins and reasons people believe it? There are a few theories. 1. Holiday optimism. People feel good during the holidays, and that optimism shows up in the markets. Basically, investors are like Buddy the Elf, smiling is their favorite. 2. Portfolio rebalancing. Fund managers clean up their portfolios for year-end reports. It's like when you quickly clean your room before guests arrive and pretend it's always been that tidy. 3. Low trading volume. With many big players on vacation, markets can move more easily. Fewer people at the wheel means smaller pushes create bigger swings. 4. Early positioning for the new year. Some investors buy ahead of January, expecting strength. Kind of like showing up early to the gym on January 1st, and then never returning. The reality, does it actually work? Here's the truth. Historically, the Santa Rally has happened more often than not. But, and this is a big but, like Shrek, big, it's not consistent enough to rely on as a trading strategy. It's like believing in the Force from Star Wars. Sure, sometimes it works, but if you trust it blindly, you might end up like Anakin and lose everything. Some years the market tanks in December. Some years it flies. Some years it goes sideways like a confused Roomba. So yes, the pattern exists, but it's not magic. Why the market sometimes doesn't rally? The Santa Rally tends to disappear when there's major economic uncertainty, the Fed is tightening, geopolitical issues spike, investors are already overextended, market sentiment is sour. In other words, Santa doesn't show up if the market is on the naughty list. Investor sentiment today. Nowadays, the Santa Rally is less about data and more about vibes. Traders joke about it, watch for it, and sometimes even trade based on the hype. Investor sentiment becomes a self-fulfilling prophecy, until it doesn't. As the Joker says, it's simple, we watch the world burn. And sometimes the market does just that in December. So is the Santa Rally real? Kind of. Maybe. Sometimes. But don't bet your holiday money on it. If you like this breakdown, smash that like button like you're opening presents on Christmas morning, and hit subscribe for more straight-up market clarity. This is Wool of the Market, where we don't predict, we prepare. See you in the next one.